G'day there. Welcome to the closing bell. I'm recording this on the 16th of June around midday. That's the Friday. And finally, we've had a bit of movement in the market. It has broken out above that level of resistance I've been showing you, above that 43.50 zone. And I was saying, look, you're going to expect to see a good move higher from there. And we're starting to see that, aren't we? That it is starting to really rally now that shorter term downtrend over the last few years, and this is the monthly chart of the S&P 500, which I think is really key. And you can see that downward move with the waves going lower highs, lower lows. It's broken that now, hasn't it? That was the lowest high of that downwave structure. So you sort of keeping an eye on that. Once it busts above it, it's starting to say, well, this is threatening to look like it really is turning around. And we know that support came in, and we got the monthly buy pivot there quite a few months ago. So it's been a case of we've had a weekly uptrend, but the monthly downtrend. So it's been a really difficult market to analyze. And I don't want to stick my neck out too far right now saying things are definitely changing. Because, I mean, look at that. We've really had nearly a year of this market just going nowhere. And it's been completely dead. And finally, it's broken above that key resistance zone and is trading higher. So that's a good development. And you can see that the trends, those 10-month exponential versus the 20-month simple, that's the 10-month exponential there, 20-month simple there, just a feeling of those long-term trends. You can see it's getting pretty close, isn't it, to turning back up. So there's a few sort of signs there saying that the buying pressure is strong enough to overcome that downward pressure that we've had for the last couple of years. So look, it is a positive development, and I've got to back off from the strongly bearish view, I guess. But I just want to point out the final resistance zones. And I have actually pointed this out to you before. I'll just switch to the weekly to remind you. This is the weekly chart of the S&P 500, and we've been just waiting to see, what was going to happen. The key levels I sort of had for you where the market was before for just months and months was, down below 3,800 was really key, which is where the real selling pressure would have come in. And I was saying above this 43.50, watch out that it could really spike based on short covering. There's a big short position out there in those S&P 500 futures, especially the leveraged funds have quite a massive short position. I think everyone really got quite bearish. So a lot of this could be short covering. So this is where where I'm saying, where are the risks going forward in this market? I just wanted to sort of point out that, yes, it's rallying and we've broken out above that key level. So, on the weekly basis, you just have to be bullish for the moment, don't you? This weekly uptrend is in place. No weekly sell pivots to be seen anywhere. And, it's well above that 10-week moving average. So look, it's very strong. You need to see quite a big sell-off to change your tune. So for example, really it needs to at least create a weekly sell pivot, doesn't it? So that'll be a weekly close below this week's range. That's down at 4,300, which is, quite far below where we are now, 160 points below where we are right now, 44.60. So we do need to see some strong selling pressure to shift from a, constructively bullish short-term view right now. But I just want to point out that if we're looking at this whole wave down, the key levels really is that buy and sell zone. This is where the market gets fooled. You can see that lots of buying pressure came in there around that buy zone of the wave, with prices gravitating back to that point of control. And on the top side as well, the sell zone of that is where the real selling pressure can be. So this is where the market's just rallied. And this was what I just wanted to point out today, was we've had that breakout above that key zone, which has seen that strong selling pressure come in, the buying, which could be short covering, driving prices away from this midpoint, this point of control, which is where the market's been stuck, that point of maximum indecision. It's just months and months and months of being stuck there. So once it breaks away and broke out above that key level, you get that really strong buying pressure, which takes you up into this higher risk zone. So that's why I just wanted to say, you've got to allow this weekly trend to continue and be at peace with that it could go like that, could keep trending higher and higher. But we're now rallying up into quite distinctive resistance zone for the market here. This is where everyone's getting bullish. The shorts are covering, people are getting bullish, and this can be the real hoodwink, is when prices turn back down from that sell zone and head back to the point of control. So that's the real risk, especially with rates still staying high, the Fed saying they're not lowering rates anytime this year. Will something break randomly? That's the sort of thing that can happen in this market environment. So it's a really complex situation, and it's a difficult one to sort of explain. But the point being, we're allowing this uptrend, the weekly, to take shape. It's broken out above there, so it's looking constructive. This up wave, it's now broken out, above the high of that. So this is constructive, this up wave, where you're saying, right, you really need a lot of selling pressure to change that, but be aware that it's now going up into this zone, which is a real high risk area. So that's 4,500 to 4,650 in the S&P 500. This really is my expectation, that we do see a reversal from there, and we do actually revisit that point of control. So that's my big prediction, I guess. But it's just still early days, isn't it? We haven't seen any sign of a reversal yet. So that's really just based on my understanding of these waves and where the selling pressure comes in. And it'll be really great proof of the strength of this market if we see it just trend straight through this sell zone area. And of course, breaking out above that high, everything changes above there. So I just wanted to set that out. It's sort of a complex situation, I guess. You may be thinking I'm not really saying anything. Fair enough, if you do think that. But the point being, I'm just allowing the uptrend to continue. There's no signs yet of weakness or worrying. It's broken out above a major level. So yes, we're letting this continue and take shape. You do have to change your view because it has broken out above that level, but there is still some hurdles to come. That's, I guess, my major point, that this is where people can get really fooled by chasing it higher, thinking everything's fantastic, and then the big money comes in and starts hitting the sell button, and we revisit the point of control once again. So that is it for today. Really need to see more data to see how it trades around this area, but I'm just wary of the fact that this could all be short covering, and then the selling pressure comes in. All right, that's enough. I'll come back with more next week.